Hello, everybody, and welcome to exercise 10-10. These are three separate situations on the capitalization of interest. So just again, if we're self-constructing an asset, whether it be a building, whether it be machinery, and if we have debt outstanding, what we have to consider is the capitalization of that interest, which is going to be the lesser of the avoidable interest or the actual interest amount. So, situation one, on January 1st, 2020, Ono signed signed a fixed price contract to have Builder Associates construct a major plant facility at a cost of $4 million. It was estimated that it would take 3 years to complete the project. Also on January 1st, to finance the construction cost, Ono borrowed $4 million payable in 10 annual installments of $400,000 plus interest at 10%. During 2020, Ono made deposit and progress payments totaling $1.5 million under the contract. The weighted average amount of accumulated expenditures was $800,000 for the year. The excess borrowed funds were invested in short-term securities, which Ono realized investment income of $250,000. What amount should Ono report as capitalized interest during 2020? So the first thing I would want to say, to be very clear, is that you'll oftentimes see in these questions where they'll say, oh, well, we invested the excess amount in some sort of investment security. And that's really irrelevant to this. We're going to treat that separately as interest income. It's not going to reduce or offset the amount we're capitalizing to the project. So what we're going to do here is we're going to say, okay, what was the amount of money, or what was the amount of the actual interest? So my actual interest amount would be 4 million times 10%. Whoa. Hold on. So the actual amount of the interest for the year was the principal, my interest rate. So we're going to capitalize interest of the lesser of the actual interest versus the avoidable interest. For this one here, we have weighted average construction expenditures of 800,000. That number is given to us right over here. And what we're going to do is we're going to use a rate of 10%, because that is what I do first. Is I see, is there any construction specific or debt? And since this is the construction specific debt, I'm going to go ahead and use this amount. So the amount of my avoidable interest is going to be $80,000. So this 80,000 is going to be the amount I'm going to report as capitalized interest, meaning that I'm going to add it on to the cost of the asset. So here, yeah, there we go. Okay, let's take a look at situation two. During 2020, Zagatova constructed and manufactured certain assets and incurred certain following interest costs in connection with the use of those activities. So all these assets required an extended period of time for completion. Assuming the effective interest capitalization is material, what amount should of interest cost be capitalized? So this is giving us a little bit of a different situation, because we don't know what the weighted average expenditures are, but really what this question is driving towards is, as we look at these interest costs, what should we be capitalizing? So let's look at the first one here. So the warehouse constructed for Zagatova's own use. Absolutely, yes. This is a building or a plant. They're going to be using it on their own. They're not using it for somebody else. So again, it's a self-constructed asset. So absolutely, this $30,000 would be included. The special order machine, basically for sale to an unrelated customer, produced according to the customer's specifications. So with this one right over here, let me just take a look here. Okay. So in this case here, special order machine for sale to an unrelated customer produced according to the customer's specifications. So I would say that this would be capitalized, but I don't. The answer to your book says yes. And oh, I don't know about this one. I don't know about the 9,000. I wouldn't give you a question like this on an exam, but this would be something that I would want to go through and take a look at a little bit more carefully. Because if I'm constructing an asset for somebody else, I do not believe that that has, I'm not sure about that one. So I'll have to get back to you. If you want to ask me about it in class, please do so. Probably not going to, so I can put that out there. If you do ask me, I'll give you 5 extra credit points to the first student who asked me about that. There you go. So I know that you're watching these videos. So, and it's really 5 points out of 250 isn't that much. So over here, inventories, and also I'll have the class give you also a round of applause. Inventory is routinely manufactured, produced on a repetitive basis. That will not be capitalized. So even though if I'm borrowing against my inventory, that's not going to be something I'm going to capitalize interest on. It's really for special, basically self-constructed assets. Okay, so right over here, looking at situation number 3, Fleming has a fiscal year ending of April 30th. On May 1st, Fleming borrowed $10 million at 11% to finance construction of its own building. Repayments on the loan are to commence the month following completion of the building. During the year ended April 30th, expenditures for the partially completed structure totaled $7 million. These expenditures were incurred evenly throughout the year. Interest earned on the unexpended portion of the loan was $650. Again, we don't care about that. How much should be shown as capitalized interest? So the actual amount of interest for the year, and we can just kind of copy this down. So my principal is 10 million, and my avoidable interest, and this is what's tricky, okay, 7 million. The expenditures for the partially completed structure totaled 7 million. These were incurred evenly throughout the year. So my weighted average constructional expenditures are going to be 3.5 million. And it's because these here were being incurred evenly throughout the year. So that's where I'm getting this value here. This is going to be at 11%, or a total over here of 385,000. So that is exercise 10-10. Thank you for watching, and I look forward to seeing you on the next video. Have a great one.